Midcap sees a big wave of green as advances far outstrip the declines, even as frontline indices mark the time. Financials, industrials are the big gainers, while FMCG and consumer durables drag. The group of ministers has recommended creating a new 35% peak GST rate for tobacco products and aerated drinks, along with higher taxation for clothes, watches, shoes, cosmetics and other luxury consumption items. On the flip side, it proposes to get relief on life and health insurance. The HDFC Bank management tells CNBC-TV18 in an exclusive interaction that it will take the securitization route to raise resources and sees the rising from 15,000 crore rupees to 1 lakh crore rupees in a few years. And the bank is also sanguine on the growth as well as expects to outpace the industry with a merger matrices by 2027. Axis Bank tells CNBC-TV18 that the Q2 GDP growth number was a shocker and there is not much credit demand from the corporates, even as SMEs sees so growth while the bank pulls back on unsecured credit. The Deputy MD Rajiv Anand hopes that the RBI will help address the liquidity issues with a CRR cut. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Whitney Motiwala. Quick look at the market today. We are seeing the markets are holding on to that green today. Nifty holding on to gains of 0.6%, mid and small cap too, performing in tandem with the benchmark indices as of now. Nifty Midcap is up 0.6%, small cap up 0.6% in trade. Yesterday we had seen an outperformance, but today it's in line with what we're seeing as the benchmark indices are doing. Other than that, Nifty Bank, let's pull that up. Yesterday, that was underperforming, but today, that is outperforming when you look at it in terms of the market. Nifty Bank is holding on to gains of almost 1% today in trade. PSU Banks as well as Nifty Media, that is among the top sectoral gainer that we've seen coming in. While on the flip side, we have the FMCG names that are under pressure, and Nifty FMCG is among the top sectoral loser. A lot of stocks that are buzzing in trade in terms of volumes also, and high up move that we're seeing coming in. HEG and Graphite, that is seeing very sharp up move today. And other than that, we have Gujarat Pipavav, BLS International among some of the other Nifty 500 names that are seeing a sharp up move in trade. But let's move on and start the show with the CNBC-TV18 exclusive that we have for you all. Sources tell CNBC-TV18 that the group of ministers set up by the GST Council has proposed rate of changes for 148 items. This is including a special rate on tobacco and aerated drinks. Timsy is joining in with us to tell us more details on that one. Timsy?
Well, what sources have told us that the GST Council nominated group of ministers on rate rationalization is likely to propose a major overhaul of GST rate structure, and top on the proposal list is to create a special rate of 35% along with a rejig of rates of as many as 148 items. As per the recommendations, the special rate will be applicable only on tobacco and tobacco products and aerated beverages. If agreed upon, the tax on these items will go up from existing 28% plus cess to 35% plus cess. Apart from this, the other rate revisions proposed is on items such as ready-made garments, where the proposal is that any ready-made garment costing up to 1,500 rupees should attract only 5% GST, and those between 1,500 to 10,000 rupees should attract 18%, and those costing above 10,000 rupees, being a luxury, should be taxed at 28%. Further proposals include reducing GST on 20-litre packaged drinking water bottle from 18% to 5% and increasing GST on shoes priced above 15,000 rupees per pair from 18% to 28%. Similarly, on wristwatches, those priced above 25,000 rupees may also see a hike from 18% to 28%. Also, a similar sort of a hike could be proposed on cosmetics, handbags, etc., where the group of ministers feel that beyond a price point, since they are into luxury bracket, they should attract 28%. Apart from this, a separate panel has suggested rate revision on insurance. The panel is likely to propose complete GST exemption on pure term life insurance premia from current 18%. On health insurance, there are three categories. First, for senior citizens, without any cover cap, this should be exempt from GST is what the recommendation is, and the current rate that is levied is 18%. For non-senior citizens, there are two proposed brackets. Firstly, where the cover is of up to 5 lakh rupees per annum, the proposal is to exempt GST, and for cover above 5 lakh rupees per annum, the GST should be reduced from current 18% to 5%. Apart from this, many common use items such as bicycles, exercise books, etc., food items will be brought down from their respective rates to 5% is also on the recommendation list. Apart from here, and important to note that the Group of Ministers report is not a final decision. The report will now be discussed by the GST Council, which is slated to meet on December 21st in Jaisalmer. So any final decision on GST rate changes will be taken by the Council only. And this special rate of 35% is proposed to make up for the potential revenue loss which could occur due to these rate changes, which is because of the proposals to bring down taxes on various common use items, etc. Let's see what happens in Jaisalmer on December 21st.
Okay, all eyes are going to be on Jaisalmer on December 21st, and what are the announcements that are coming in on that front. Thank you so much for that, Tim C. But we also spoke to Pratik Jain of PwC India and KPMG's Abhishek Jain to understand how the proposed price-based GST structure could play out. Listen to what they had to say.
We have not seen many cases where the GST rate per se is based on the price of the product. Purists would say that this is not necessarily the best tax policy because it leads to a lot of distortions in the chain. It leads to pricing challenges and so on. As of now, what seems is the proposal is that 28% rate on tobacco and aerated beverages is proposed to go up to 35%. That would mean that it would continue along with the cess, which continues as it is. Now, cess is going to end in March 26. You can collect cess till March 26. So it'll be interesting to see whether they reduce the cess over a period of time to make the effective rate same as you have today. But as of now, the proposal seems to be in addition to cess, and cess is not getting subsumed in any manner. So 28% then becomes effectively 35% if this proposal is accepted.
If 35 comes without cess being subsumed, then that's a fifth rate that gets introduced, which adds to the complexity. And again, for same goods, depending on the value, of course, it was there in certain sectors. Even today, like for automobiles, you had different cess rates depending on different parameters of automobiles. Also for textiles, currently there is a two-rate structure, 5 and 12. But again, if more and more goods sort of have different rate structure, the same goods depending on different values, it does add to the complexity and it does distort the overall picture.
Okay, and let's move on. Insurance companies are in focus with the government looking to change the investment regulations for these companies. Yash is here to give us more details on that and tell us what the changes could be. Yash, good afternoon.
Well, Vinny, good afternoon. Very interesting details coming out as far as the government proposals on Insurance Act amendment is concerned. Another one of those interesting amendments which the government has proposed is changes with respect to the investment regulations which currently exist for life in general and health insurance companies. Currently, as far as the investment limits, which means how much an insurer, whether life, general or health, can invest in a particular asset class is embedded in the Insurance Act. What the government intends to do is partially keep it in the Insurance Act and partially give the authority to decide the investment limits to the regulator. I'll tell you exactly what that means. What the government has proposed is to have 25% investment from life insurance companies in government securities, which means central government securities, another 25% in state and central government securities both. 25 plus 25, that would be 50% to be embedded in the Insurance Act. And with respect to the balance 50%, the regulator, that is IRDAI, to have the authority with respect to how much they want to allow life insurance companies to invest, let's say, in equity or infrastructure and social sector or corporate sector bonds. What exists currently is 25% embedded in with respect to the government securities, another 25% in state and central government securities, minimum of 15% in infrastructure and social sector, maximum of 20% in corporate debt, and maximum of 15% in equity. What happens with general insurance companies? The government has said that 25% to be embedded in the Insurance Act with respect to investment in government securities, minimum 10% in central as well as state government securities, and the regulator to have the authority with the balance 65% how they want to allow general insurance companies to invest between equity, corporate debt as well as infrastructure and social sector.
Okay, Yash, thank you so much for that update there, and thank you so much for joining in with us. But let's move on. And Axis Bank's Deputy MD Rajiv Anand says that the growth slowdown was quite palpable following the Q2 earnings. Speaking to CNBC-TV18's Ritu Singh, he says that the credit demand for corporate India is not much, and on the upcoming RBI policy, he adds that while the repo rate cut is unlikely, a CRR cut will be a welcome move. Listen in.
I think the fact that we've seen this print on GDP growth has certainly surprised everyone, and I'm sure RBI is redoing their numbers as well. That with 6.2% on inflation, it's unlikely that we will get a repo rate cut anytime soon. I think it's a very close call on whether a CRR cut is something that we will get on Friday. On the one side, yes, I'd be delighted if the CRR cut comes through. The repo rate is at 6.5%. Banks on the margin are raising money at anything between 7.5% to 8% for one-year deposits. Yeah. And I think that gap needs to come down, and I think a CRR cut will certainly help bringing that down. I think given the fact that much of the book is EBLR linked, a repo rate cut will have a short-term impact as far as margins are concerned.
Okay, on that note, we're going to slip into a very short break then. And up next, we get you all the details as the government looks to scale up its flagship internship scheme. So don't go anywhere.
Very happy birthday wish for CNBC, and it's an amazing channel, and you've done and achieved so much in 25 years, and may the journey continue. I've always watched you guys from outside with tycoons of industry or many of the shows, Young Turks, Young Turk show that you do, and many others. And of course, one has always known Shriram Finance, a lot of interaction at Davos. And of course, before that, IBLA and recognition at IBLA.
Welcome back to Business Lunch on CNBC TV18, and let's move on and let's put the focus on the government's internship scheme. Now, sources are telling CNBC TV18 that the major tweaks, including an expansion of the scheme, may be likely soon. Shivani is here to give us more details on that front. Shivani?
Sources have told CNBC TV18 that the government is planning significant changes to its flagship internship scheme to make it more inclusive and effective. One of the key proposals by the Ministry of Corporate Affairs is expanding the scope of participating companies. Now, currently, remember, it is limited to the top 500 firms. The program now could see inclusion of top 1,000 companies. Additionally, banks and financial institutions are likely to join the program, creating a broader pool of opportunities for interns. Also, another big change that can happen is the eligibility criteria. The age limit may be revised from the current 21 to 24 years to 18 to 26 years. Educational qualifications too could see a relaxation. At present, students pursuing degrees or those without a high school diploma are excluded, but the new rules might allow them to participate, attracting a wider range of applicants. Now, these changes aim to make the scheme more accessible to more people, aligning with the government's goal of building a skilled workforce and enhancing employability. Now, remember that the pilot project of the internship program was launched on December 2nd. According to the Ministry of Corporate Affairs, the first cohort of interns hailing from 625 districts is now interning across 34 states and union territories in India. The internship portal, sources suggest, has already received over 6 lakh registrations. Sources also say that these changes come on the back of lessons learned from the registrations of the pilot project and are likely to come into effect only after the pilot project is over. Back to you.
Thank you so much for that update there, Shivani. But let's move on to some national updates. Now, heavy flooding triggered by the cyclone Fengal in Tamil Nadu continues to cause massive destructions across the state. Now, the cyclone has resulted in extremely heavy rainfall in North Tamil Nadu and Pondicherry. Tiruvannamalai as well as Vilupuram and Krishnagiri district have also recorded unprecedented rains with at least 7 dead in Tiruvannamalai due to the mudslide. Schools, colleges and government institutions have been shut across the state, while the Met Department has warned of more rains in the coming days in Karnataka and Kerala. Rescue operations are underway. Okay, it's time we slip into a short break, but after the break, we'll get you more news and updates, so don't go anywhere.
For 20 years, it has been India's most coveted stage for business leadership. The benchmark of unparalleled excellence.
We have to dream big and even bigger for India.
An accolade that celebrates character, integrity, and decisive action.
You just have to do your best.
Not identified by any single name, nor defined by a single achievement.
The best years are to come, and you don't have to wait for long, it's round the corner.
But redefined every year by visionaries who inspire and legends who lead. A journey that honors those who set the bar higher year after year. This is not just an award, it is a celebration of leadership in action. CNBC TV18's 20th India Business Leader Awards.
Welcome back to Business Lunch on CNBC TV18, and moving on to some updates. The US President-elect Donald Trump has pledged to block Japanese company Nippon Steel's planned purchase of US Steel. In a post on social media platform Truth Social, he said, and I quote, "I am totally against the once a great powerful US Steel being bought by a foreign company, and I will block this deal from happening. He went on to write that he will make US steel strong and great again through the use of tax incentives and tariffs. Okay, and moving on, billionaire Elon Musk has faced a big setback in the US. A Delaware judge has reaffirmed her January ruling that Tesla must revoke Elon Musk's $56 billion pay package. Chancellor Catherine McCormick also rejected a massive fee request by the attorney who argued that they were entitled to legal fees in the form of Tesla stock valued at more than $5 billion. The ruling comes in a lawsuit filed by Tesla stockholders whose challenge Musk's compensation package, which the judge found was engineered through sham negotiations with the directors who were not independent. The French government faces an almost certain collapse later this week. Far-right and left-wing parties said that they will vote for a no-confidence motion against the Prime Minister, Michel Barnier. Their move came in after Barnier used the special powers to pass the budget in the parliament without a vote, as there was no support for the controversial social security reforms. Meanwhile, the Prime Minister has urged lawmakers to not to be back and not to vote in terms of no confidence vote. Okay, and with that, it's a wrap on this edition of Business Lunch on CNBC TV18. Thank you so much for tuning in. Don't go anywhere. You have Midcap Radar up next.